Welcome to Jazz After Dark. How you guys doing tonight? All is good with you? I'm having a bit of a problem here. I can't seem to get this little stinker open. Trying to get to one of my favorite bourbons, actually. It's called Breckenridge Bourbon. And probably shouldn't do that right by the mic, but it is phenomenal if you've never had it before. Colorado based there. Very much tastes like the Rockies. You know what I mean? There we go. Finally getting something here. We're just going to do it the hard way. I hope you're having a good night and you're ready to learn a little something. We're going to experiment with some data and share with you Breckenridge there. And it's a weird looking glass. I wonder what that little knob is for there, huh? We're going to experiment a little bit with some data. It occurs to me that maybe last night I scared the children, so to speak. And I hope you have your favorite drink. You're ready to hang out with us. Got some goods for you. Put a little time into this. Breckenridge, very, very clean, very light. Good sipping bourbon there. And usually the label actually comes off. Oh, there it goes. Finally come off there. I've got it all together. Don't worry. We've got this locked in. We know how to handle ourselves here. We're financial advisors at Jazz Wealth. We manage over $250 million, which I don't say to brag. I say because our business model depends on us growing people's accounts. We do not benefit from selling things or planning and charging you money for that. We only grow as a company if your account grows, period. So it puts us in your back pocket, and it makes it our best interest to make your account grow legally and honestly, of course. And of course, you can visit our website and learn more about that. Last night we talked about, well, my hands are dirty. People think I got office hands all the time. I've been working on the truck. I got the old office or the working hands there. That's what I do in my off time. You ever seen? I have a 1941 truck that I like to work on. Back to the topic at hand. We talked about recessions last night and the fact that the yield curve being inverted always leads to a recession 100% of the time. So I thought, let's go back a little bit. Let's actually look at two things here. Number one, how long does it take for the recession to start? Because it doesn't mean that we immediately go into a recession. In fact, you could go 6 months, you could go a year and a half before starting a recession after the first inversion. Now, the longer the yield curve stays inverted, and if you don't know what I'm talking about, last night was the lesson on that. The longer it stays inverted, the faster the recession tends to happen. But the yield curve can go inverted and sort of slop around a little bit. It looks good, looks bad, looks good, looks bad, and then recession. So we want to explore that a little bit. And we also want to explore the fact that the stock market bounces during recessions. And even more to add to that, if the market has already sold off leading up to the inversion, the stock market tends to bounce and rally through the recession. So I don't want you guys to disconnect recession, or I want you to disconnect recession from correction or bear market. The stock market is very much forward thinking, okay? So chances are if a recession were on the horizon, the market might have already pulled back. If it doesn't, it tends to pull back during the recession, but also bottom during the recession. That's a big deal because a lot of people think recession means stock market weakness. That's partially true, but every bounce in the market or bottom in the market happens during the recession. In fact, I did a really cool class for clients where we measured the length of time, the percentage through the recession before the market decides to bounce. It's actually a wine and wealth class. So we looked at each recession and we said the stock market bottomed 23% through the defined recession. And so if you said, oh my God, there's a recession, I'm not going to invest, you were right for the first 23% of the recession, but then that was the bottom and it took off from there. I'm getting off topic here tonight. All right, let's take a look here. We're going to pop on over to the screen. This is very much similar to what I showed you yesterday. The purple line is the comparison between the 10-year rate and the 2-year rate, all the way over here on the right-hand side. Anytime the purple line goes below the 0, the yield curve is inverted. First inversion happened in 2005, looking back to the second to last recession. And then we actually had, 2 years, almost 2 years before the recession actually started. So the yield curve is inverted and stayed inverted, though not by very much. Up at the top, you can see the stock market's performance. We rallied through the initial inversion, and that was just too much. We topped out, first little drop, second little drop, third one did it right into the recession. And of course, as you would expect, the inversion disappears. We go back to normal bond markets. The stock market bounced towards the end of the recession, but ultimately the bottom was in before the recession had indicated that it was in fact over. So I think I put some notes here. Let's go like this, and we'll go to the next one. The S&P gains 17.5% after the inversion before giving it all up. The recession began in November 30th, 2007. S&P loses 35%. That was also a major financial crisis, if you want to look at it that way. And the recession lasted a total of 1 year and 7 months. If we look back to 2000, this was also a pretty horrible recession led by the dot-com bust, if you're fortunate enough to have lived through that. We're looking at the first inversion. We're looking to go below the 0 line. Where is it? The first inversion on February 3rd, 2000. The S&P lost 13.38%. This is a little bit different after the first inversion. And that was largely just part of this first sloppy area there. Notice how nothing happened. The world was a little bit concerned about the inversion, of course, what was happening in the tech market. The recession began in March 2nd, 2001. That's officially right here where the gray shaded area begins. We lost 12% during the recession. Ultimately, if you play hindsight a little bit, it kind of looked like we did bottom for a while, kind of a massive rally there. A bear market rally, essentially, inside of it. We got a nice little double-digit rally, and then we made a new low. We did bottom inside the recession, although it was towards the end of the recession and not after quite a bit of a beating there. And the recession itself lasted only 8 months. Right? So what I'm trying to illustrate here is the look, a little bit of history. We'll just go back and look and see how things happen. So we'll take a look at the last one. I believe the last one I have prepared for you. First inversion starts, we did have a recession. And remember the stat, 100% of the time after an inversion, there is a recession. This one only took 3 months. And this was more typical of a normal economic cycle rather than having a collapse of the tech sector or overvaluation of the dot-com stocks at the time. There was a dot-com for everything. Or having the housing market in 2008 basically collapse, the financial system almost, falling into ruins. This is a little bit more normal. So we had an inversion. 3 months later, we have a recession. If we look through this, the S&P saw the inversion and chose to ignore it. Sounds a bit familiar, doesn't it? The recession begins June 29th, 1990. The S&P gained a total of 3.47%. What is that? What's that mean there? What am I talking about? From the time that we started to the time that we finished, there was actually a gain. Now, it wasn't comfortable. You had to live through some nonsense there. But ultimately, if you invested during the recession, you made 3.47%. And the recession ended up only 9 months long. And shortly thereafter, we hit all-time highs. All right. That's all I got there. Yeah. So, what does that tell you? It tells you that although we're likely going to get in a recession here, we're going to have one, that the opportunity presents itself during a recession. That doesn't mean you want to invest and try to pick the bottom or anything. You'd have been wrong quite a bit, actually. But it tells you that there is likely to be stock market weakness. However, the market will bottom during the recession. So we want to participate to some degree, right? Maybe you wait for a bounce and you play along. Even if it's not the bottom, you got a discount. And so we want to look for that bottom during the recession. When is that? It is the toughest time to commit new dollars to the market because all you're seeing on TV, likely YouTube here, Facebook, all social media platforms, is fear, panic. This is the big one. This is the time. And I think those of you that lived through 2008 would know that we all kind of thought that was the big one. If you were around in 1987, you damn well thought that was the big one, and for good reason too. If you lived through the dot-com bust, you probably thought that was the big one as well. You see, every time there's some reason to think this is the one we will never recover from. Just ask yourself, if there is a collapse in the market that we don't recover from, does it really matter? Like, are you likely the only one that has problems? No, right? Not to say, I hope that doesn't happen, but you get what I'm saying. Look at the opportunity through a recession and use the data that I shared with you yesterday and now today to say, okay, I'm not going to spend my money right now. This is really hard for me because I have a lot of things I've been saving up for a long time. But I'm not going to spend my money now. I'm not going to chase that car that I want or whatever, even though there is a new credit from the IRS to go ahead and buy one. I'm going to hold back that cash because the real opportunity to buy things cheaper, to invest in things cheaper, stock market, real estate, whatever, comes during a recession when there's the most amount of fear. Use your dollars then. The greatest amount of wealth, and this is not my saying, I believe, but the greatest amount of wealth comes from when periods where people are really nervous. You want to buy a Range Rover? It seems like everybody has a Range Rover these days, but you want to buy a Range Rover, buy it when nobody can afford one because they have to get rid of them because they spent their money, they lost their job, their business has downsized, whatever it may be. That's the lesson of the day. What do you think? I'm pretty confident we're going to have a recession. I don't think it's going to be very scary. I don't think it's going to be very interesting. I think it'll just be a recession. People slow down a little bit. And it will totally be Fed-induced, and they're okay with that. They've all but said the exact words. If we go into a recession, we're okay with that. They've made the comments numerous times. No matter what it takes, they will fight inflation as long as it takes and as hard as they have to fight it. They will. Some of that is just words. Other of that is actual actions that'll back it up. But use it as an opportunity. I can't tell whether you are a client or not or whatever. Just remember I said that. There will be numerous recessions and economic downturns in your life. Use them to your opportunity. Think back to all the times you said, man, I only wish I would have had a few extra dollars during the housing crash, even 5 years after the housing meltdown. If I'd have just had a few extra dollars, if my credit was straightened up just a little bit more, if I wouldn't have spent money on XYZ, whatever it is. Bourbon. Thankfully, my neighbor is quite nice to us when it comes to this stuff. Otherwise, I would not be able to keep up. All right, enjoy the rest of your evening. We will see you tomorrow evening. Hope you learned something here over the course of this sort of part 1, part 2 series. We'll get back to normal tomorrow. We'll see you on the closing beat as well. That's a live show that we do every day at 5 o'clock to go over the stock market, kind of share our lessons, things that we're looking at in our portfolios, and teach, really. You know, we're not trying to show off or anything. I like to teach. So hope you'll check us out and appreciate you watching. Enjoy.